Good morning, good evening, good afternoon, traders around the world. This is Phil V at Trading Capital Markets, and we are the 21st of May, 2025, and we're currently 3:19 p.m. This video is going to be a trade recap or a session recap. Today's session recap. Okay, it's going to be short. Oh, short. It's going to be less than an hour, that's for sure. So stick around. It's going to be interesting, and I'm going to say a couple of things that you guys might not know. And if you do, good on you. You're on the right track. So let's get into this. All right, so this morning, what happened? I really wanted to enter in this first presented fair value gap when it broke above the breaker, used it as support, and shot off right away. It's like a double buy signal for me. I did not get in there. Okay. After that, you see these relative equal highs over here on the left. It pierced right over it. This is what you're going to see on my first order. It pierced right over it over here. That's that buy side. Okay. So that buy side got pierced. Let me just make it in a little bit bigger, bigger letters. Buy side here, 24. Bam, boom. Now you can see. So buy side. So that buy side got pierced. Okay. After that, we created a tiny, but still there, bullish fair value gap. Okay. Right when we passed straight through it and went to the low of this candle with the bodies, I had popped a sell and I used this as a inversion, right? So I got in as an inversion, and right when it closed down here, I put my stops break even. Wait, but no, sorry. Right when it started, so I entered here. This candle started moving up. Okay, right when it came back down from touching buy side once again, and it closed on this candle, I put my stops break even over here, and as you can see, it took me out at the same level. So that was my first trade. I wanted to, just in case it was a sweep, because usually it likes to build like this, build above the highs, some volume to then explode. And therefore, I waited. And my analysis was, if we break above these highs and start building above these highs, I'm going to target these relative equal highs, the 21,480s, 21,480s, 21,475s, and it did exactly just that. But there was one little mistake that I did. Oh, it's not a mistake. It was just being overly cautious, because I'll tell you guys in a second. So up, here you go. Next leg, swing low, right here. After that, swing high, swing low. Okay. So now, technically, because we hadn't done a new high, we were trading in this box. Okay. So this box right here. Take off the magnet like that. You guys could see we were trading in this box over here, this range. And my mistake was, well, it wasn't a mistake. Yes, the mistake was being over leveraged. Okay. I was over leveraged. So that's why I couldn't hold on to my position, because it was making me too jittery. So once you're too jittery, you are automatically know you're over leveraged. So therefore, I'm gonna put it where I entered, which was, oops, right here. So before this, I didn't know we were in the range, right? It created this bullish fair value gap after creating this bearish fair value gap. So I saw the retracing back to the 70%, created a bullish fair value gap, and then I thought, all right, wait, this box, let's put it in another color, because It's gonna be a little put it in blue like that. Oh, that's a bit too dark. Okay, whatever. This. So it reached this 70% retracement, okay, of this leg. I'm not calculating this wick because there's no bodies that close above this high, so I only use bodies, highs with bodies that close above the previous high. So after doing that retracement, there was this bullish fair value gap that was formed over here. Excuse me. Okay, so this bullish fair value gap that was formed over here, in there, and I use that as an entry. You see, entry to go long. The mistake I did, okay, is I put my stop right here at the beginning of this, but the order blocks body instead of putting it at the low, which would have done the invalidation, right? So right after it took me out, came back to the highs, created new equal highs. Let me show you guys, and and uh, and this how I knew that this trade was going to be good. I'll show you guys exactly what I mean by this is how I knew that this trade was going to be good. So right here we have these relative equal highs that it left, okay? And let's open two charts. Okay, we got gonna have the E-mini S&P on that range, and then we're gonna have right here the the S&P and the Nasdaq. Okay, so let's see here. Okay, so right here, you see this? We're still stuck in this range on the Nasdaq in this box. Okay, relative to the S&P, which was going down and down and down, and the Dow that made a new low. Okay, so the Dow made a new low. S&P was going down to this 1 minute fair value gap, but the Nasdaq was still stuck in this range, and that's how I knew that the Nasdaq was about to explode. So over here, I didn't want to get in because I just got lost, and there's like I give myself a rule where I have to wait like 10 minutes before entering another trade to cool down. It's like a cool down period, and I was over leveraged, so I really needed that cool down. So right here, we see it go down. Okay, S&P is going down, down, down. So if we take the beginning of the box, which is right here on the Nasdaq, so you're going to see like both things on both sides. So the beginning of the box in blue is still sideways action while the S&P is going down, 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 down. Right here, when it took this low, okay, and S&P, when S&P took this low and the Nasdaq didn't take this low on the right side, that's when I knew that it was about to explode. Okay, I really wanted to enter badly right here, but I didn't do it. So we include the volume imbalance in the fair value gap, and you see this is the entry right here. Entry to minimum these highs, okay, and our target the 80s. It went even higher after that. We'll get to that later. So that's what I was doing, and for now, the reason why I was over leveraged is because I was trading one mini for like $15,000 of a real account. So it's like $500,000 worth of, let's say, Apex accounts where you have a combined $13,000 of drawdown. Okay, and one mini is a lot when you have only 15,000 of margin. Okay, because these you see these swings just in this range. Okay, on one mini is like $1,000. Just this range is $1,000 from the low to the high. On 1,000, that's like 7% of your account. So you can't do that. And I knew I couldn't do that, so I cut my trade short and I let the rest ride. Tomorrow we'll be coming back, but with micros, and we'll be reducing our uh, our risk to only 2.5%. Well, only to 2.5% per trade. So that's why I didn't re-enter. I knew it was gonna be the great trade. I knew it was gonna happen, but um, as I mentioned earlier, I have a cool off period. So, given that we had this period of consolidation, what I usually like to do is wait until 12:15, about 12:15, to look at the markets again. Okay, so I was not there. I was taking my break. 12:15 arrives. Where's 12:15? 12:15, 12:15, around here. So 12:15, midday. A little bit later, after 12:15, 12:50 comes around. Okay, and we break structure right here. So let me do this price action exercise like that. You guys understand uh, where it broke and what a possible entry could have been. So from this high to this low, to this high, to this low, to this high, to this low, to this high, to this low, then to this high, then to this low. Wait, let me see if these highs, the bodies of these highs passed the high. No, they didn't. So this is going to be over here to this high. That's the leg. And as you see this, the bodies did not close below this low. So we keep the market structure moving up from there. So the bodies, new high. This is the high with the bodies that are closing above. Right here. So now we're currently within this leg. Come back all the way here. New highs over here. And right here we did that shift. Okay. So that shift arrived right here. And since we had no fair value gap close by, the only one was over here. Let me show you where we could have entered. So that shift arrived right here. That was the low. This was the high. And then continue lower from there. Over here, there's no swing low, there's no swing low, there's no swing low, there's no swing low. So technically this trade, you could have kept it all the way till here. And what would we have used in order to enter this trade is this break block. So the last down candle before making new highs. Breaker, 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 right here. Nice orange color. Boom. So we use the breaker block as an entry right here. Let me take it down like that. You guys see that it entered and shot straight off from there. Not even leaving the chance to get back to this initial fair value gap that started the momentum. Okay, so that's what happened. And let's say you entered over here. Let's do this together. Entered right here. Had your stop at the highs. And your take profit would have been these relative equal lows that it left over here. Because who would have imagined it comes and sweeps all these lows down here? Let's be realistic. Or what else we could, the other thing we could do is trail the stops at the highs of the candles, of the highs of the down candles, right? So down candle, down candle, down candle, down candle, down candle, down candle, until we get stopped out right here with this candle that closed right above, that went above this down candle. So that's called the trailing stop, active trailing stop. So that would have been, my friends, a 6.31 to 1 ratio. Okay, that would have been a mighty, mighty trade. I was a little bit over leveraged over there. That's why I didn't catch the up move. But the PM session down move would have been immense, immense trade. That would have been what? How many points? 263 points. Okay. After executing this trade, we have the break below these lows, and we have a bounce back from this first presented fair value gap lower. And at the beginning of the day, the target, after it breaks these lows and creates bodies below these lows, you see, you're gonna see it, I think, in my pre-market video, where I said that the target, if we break those lows, is gonna be this 15-minute fair value gap, which is in a balanced price range. And where did we reach? I think fairly close to that. Yep. So that was a trade that I did, well, that I had in mind this morning. I over leveraged, so I got stopped out early, saw the trade go without me, and that's fine. Tomorrow we'll be back even better than ever and adjust our risk to not feel the heat at all and just have perfect executions. So on that note, I hope you guys enjoyed my session recap video. Like and subscribe, and yeah, come join me every morning 9:30 a.m. to 10:30 a.m. Eastern Standard Time live. Peace, traders.